So here's our Section 3 notes for Unit 2, Budgeting and Record Keeping. Our goals for our unit are to describe and prepare personal budgets, explain the purpose of record keeping, prepare a personal net worth statement and personal property inventory, the importance of your planning will be to understand what scarcity is. Why do I need to plan? You only have so much income. How do you allocate your needs and your wants based on that income? If I had unlimited income, then I could have unlimited needs and wants. Is that realistic? Your disposable income then determines how much you can spend or save after taxes have been paid. So if I develop an effective financial plan, which is a set of goals for spending, saving, and investing the money you earn, you will make better financial decisions and meet those needs and wants. So I have a financial plan. It helps you to determine and evaluate options for your money, prioritize your options, avoid careless and wasteful spending, and organize your sources of income. It also helps you avoid those crazy money worries. So how do I prepare a budget? Well, budgeting is spending and saving is a budget and spending and saving plan based on your income and your expenses. To do that, you need to estimate what your monthly income will be. You need to know what your pay periods are, what your gross income is, and determine what your deductions are so you know what your discretionary income is by pay period for each month. You need to decide how much you want to save. A minimum of 10% every pay period is a minimum that you should have set aside. Savings is setting aside money to meet your future needs. You want to estimate what your expenses are, those fixed expenses and those variable expenses, and balance your budget. Well, what does that look like? Well, here's a simple budget for you to look at. If my different sources of income are work, allowance, and lunch money, then my total income is $380. I know that I need to spend my money on lunches, supplies, snacks, and entertainment. So my total expenses are $280. As you can see, my income is greater than my expenses, which means then I have $100 that I can put towards savings at my local credit union. So, what do I need to look at towards my monthly budget? I have fixed expenses, and those are costs that are obligated to pay at specific times regardless of other events. Examples of fixed expenses would be your monthly rent, maybe your monthly car payment, your health insurance, your cable bill, your cell phone bill are those expenses that are going to occur every month and are typically a fixed expense. You know how much they're going to be. Variable expenses are going to be those costs that vary in the amount and the type depending upon the events and the choices you make. So when you did your value spending chart, those are those things that are important to you, so you probably will put significant amount of your discretionary income towards those variable expenses. Examples of that would be gas, if you have to pay for your car. Another variable expense would be your food. Do you spend the exact same amount of money on food every single month? That may vary based on the types of events that are going on. If you're in school versus out of school, probably spend a little bit more money at home during the summer than you would during the school year. Other types of variable expenses might be gifts in a particular month. Month for the Gerard household is very expensive because we've got Mother's Day, we've got several birthdays, we've got our anniversary as well as graduation. So we tend to spend a lot more money on gifts in the month of May and December than we do any other month. So variable expenses are going to change in their frequency as well as their amounts on a monthly basis. What are those personal records that I need to be aware of? Your monthly records of income and expenses, such as bills, bank statements, and pay stubs, should be organized on a monthly basis in an annual filing cabinet. Your net worth statement is updated on a regular basis, and those are your assets and your liabilities, and you only need to change them when your assets and your liabilities change. A personal property inventory should be updated with significant new purchases. Tax records should be stored for 3 years. So every year that I do my taxes, I keep a file for that year's taxes, and I keep them on hold for 3 years. Your social security cards, marriage certificates, passports, insurance cards, birth certificates should be in a fire, water safe protection, in a safe place in your house, or in a safety deposit box. So what is a personal property inventory? This is a list of all your uninsured valuable items you own. Important statement, uninsured. You're going to make a list of what are those items that you own, when you purchased them, what price did you pay for them, and what the approximate current value is. There's a couple ways in which you can find out current value. There's some great resources on the internet, maybe eBay, Kelley Blue Book Value. You could look at Craigslist to see what would current market value be. You could do this in several different ways. This could be done in an Excel spreadsheet. It could be done by videotape. You could have pictures of these items and then keep them in a safe place, maybe on a SanDisk in your safety deposit box or in your fire safe. When you count all of them together and you have a cumulative total of your personal property, this now becomes an asset under your net worth statement. Your net worth statement is used by lenders to determine your credit worthiness. Your assets are going to be the list of all the items that you own, such as your personal property inventory, your car, your home, your checking account, any retirement accounts, investments that you might have. You want to subtract your liabilities, and those are the amounts that you may owe on things such as your mortgage, your car loan, your student loans, credit card debt would all be considered liabilities to somebody else. When you take the difference between the two, that determines your net worth. The more positive or the greater that net worth, the more creditworthy you are perceived by financial institutions. So these are all very important documents and uses to help with your planning and your budgeting. We will now next unit talk about how do I use this money in a financial institution and where are the best financial institutions to allocate my funds.